Hello guys, it's your boy August BTC back again with another video. Wow, what is going on? Bitcoin is crashing badly, guys. So as you know, we've been dropping relentlessly. Obviously, we're in the bear market, as I mentioned, because we are below the 200-day moving average. So this is typical for bear markets, and Bitcoin is basically testing or broke through this support level, and is basically trying to retest this support area. So it's been crashing pretty bad, guys. It went all the way down to 61,300, and obviously the portfolio is not taking it lightly. So I want to be fully transparent, talk about what's going on, what am I doing, and how I'm still in this market to try to make the best of it, and obviously to ride it back to the top and to make generational income. As you guys know, the goal is to get the account from $1,000 to $10,000, and right now we are not doing too well. The account is pretty down. Overall we are down about $500 ish, 500, 550, something like that. But that's okay. I'm not panicking. Why? Because I have a strategy that's working. I'm still getting $38 per day in Theta right now and still printing. So I want to talk about a few changes, what's going on. You would have seen that I've changed a few things again. And I feel like, I want to be transparent, every time that we make changes. Remember, this is a journey, guys. I'm also figuring things out. I'm also trying new things, but that's how, you effectively manufacture the win. And that's how we perfect the strategy, right? If something is not working, you fix it. So I want to talk today about a beautiful strategy called I name it the Bitcoin poor man's covered call. What does that mean? I want to dive into it and explain how this strategy is basically saving me in the bear market, or how I'm taking advantage of Bitcoin going down and still making profit, so that when we go back up, the returns are going to be, exponential. I want you guys to stick with me here. So what does that mean? Let me minimize the positions and talk about, the positions that I have right now. Okay. First things first. So remember, guys, I told you guys I have a Bitcoin synthetic position. This is a long position, which basically emulates, the price action of Bitcoin as Bitcoin goes down and Bitcoin goes up. So my goal is to increase this position size, like I told you guys, to about 0.1 Bitcoin, which is about $6,300. If you take 0.1, you multiply this by this, it's about $6,300. So I'm trying to get there. Right now, 0.07. So this total position is valued at $4,960. I actually want to increase it for you guys and make it $5,000. Right, let's do it right here. So we need to add about $40 here. So let's do that. Add $40, market limit, and then it's market limit, then it's buy the position, $40. There we go. And as you can see, $5,000, bro. This is the size that I have here, guys, for this particular position. Currently, we're down pretty bad, as you can see, but I'm not worried. Why? Because I'm dollar cost averaging. What does that mean? I'm reducing my cost basis or I'm reducing my average price for this particular position. Bitcoin is currently at 63,000. So it just needs to go back up to 71 and then go back up higher to 80K or 100K, and then I'll be making tremendous profit. So currently I'm down, but I'm down on paper, guys, right? The loss is only realized once I close out this position, but since it's still open, this is just unrealized loss, right? So I haven't realized the loss right now. So that's why you see that the account is pretty down. But we are strategically accumulating Bitcoin, so basically buying the dip. So I've been dollar cost averaging this position, guys. If I show the trade history on the Bitcoin side, on the future side, I've been buying. Look at all these buys, guys. This is simply me dollar cost averaging. Look at the date. I've been dollar cost averaging since Bitcoin was at 73, as you can see. Buying. This is simply dollar cost averaging to increase this position size, because the bigger the position size, the bigger the gains, right? And I have another synthetic long position. Again, this is part of the poor man's covered call, where you have, you own the shares of Bitcoin, but now this is synthetically, right? I own about $5,000 here, and I own about $3,000 here. So that's about, a good amount that I own in Bitcoin. So in total, I have 0.05 and then 0.07. That's way over 0.1 Bitcoin that I own right now in the account, which is great. So I've done the same thing here. The reason why I opened the second position here is because I can enter at a lower price, right? Which I've also been dollar cost averaging. If I go to my trade history, USDC, you would have seen here that I'm also entering it at a very, very low price, dollar cost averaging, just buying from 67, you know, buying, dollar cost averaging and reducing my average entry, right? So currently, this is what I'm doing. And this is the shares essentially of Bitcoin that I own so that I can ride it back up, right? So currently, Bitcoin is at 63. We're at 64 average entry, which is really good. I'm really, really happy about this position. So in total, I have about 0.1, worth of Bitcoin size. So when Bitcoin pumps back up, I stand to profit from it. But then the thing is, guys, what am I doing to gain income, right? Because right now I'm still collecting about $38 in Theta per day. So to complete the poor man's covered call is basically what you have to do. You need to have positions, or you need to own the asset or have shares of the asset synthetically, like I'm doing here with the long per positions. I have 2 positions. And then what you do is you sell short calls against these long positions to collect income or premium. And this is where the short call comes. Guys, I've been collecting premium as Bitcoin has been going down like crazy, right? I have basically short calls from 66 to 70. Guys, these short calls were all the way to 78, guys. I've just been closing from profit, closing for profit, closing for profit. This is basically what's giving me theta or income as Bitcoin is going down. You understand? So I want to show you basically what's happening here. If you come here to the trade history, if I go to BTC options, you will see how I've been closing the positions for profit. Every time that you see, let me just come here and make it easier for you guys side so that you can see. Every time that you see buy here, that means I've been closing the position for profit. So just look at the calls, right? Just focus on the calls. And also I closed the puts. I closed the puts because it wasn't really efficient for the portfolio, because the puts predict that, Bitcoin is going to bounce. And as Bitcoin was just going down, I felt like it wasn't efficient, right? It's better just to hold the synthetic longs, which is better for the account. So I've just been closing the calls. I closed at 6. I bought to close and then I open up again. I close at 71K for profit. I close at 72. I close at 73, 70, 69, 74. I've just been closing 75 call. I close again for profit. 76, I close for profit. 77, I close for profit. So I've just been repeating the cycle. So what does that mean? So here we're still in June 12, right? A June 12 cycle. So as Bitcoin basically was going down, right? I was basically moving the strike price as Bitcoin was going down. So that's simply what I'm doing. So we were right here. We were opening up the short calls from like around 77, 78. And guys, we've been just collecting premium all the way to where we are here right now. So now I stand to make about, you just have to add the 64, 50, 51, 66, $73. So I stand to make about $300 or so, right? If Bitcoin stays below 66K in 7 days. And then if that happens, then I'm just going to repeat the process for June 19 and June 26, just simply collecting premium as we're in a bear market. Guys, this will pay off in the long run. This is essentially what the poor man covered call does. It will repay me tenfold in the long run because I'm accumulating, I'm bringing in cash flow into the account, even though the market is going down, and I'm dollar cost averaging into these long positions, reducing my average entry here. However, I'm increasing the size of Bitcoin that I own, right? I own 0.07 here, 0.05 here, which is a massive position, $3,000, $5,000. So as soon as Bitcoin goes back up, the profit will be insane, guys. I will show you the account live, transparently, full transparency. But what's making this strategy efficient is because as the market is going down, I'm still making profit, guys. With these positions, I've been closing these positions, these short call positions for a win. This is basically to complete the poor man covered call campaign. So I will continue to repeat the cycle until I feel like, okay, Bitcoin has just been going crazy up. even if Bitcoin goes up, I'm just going to keep repeating the cycle, but just at safer strike prices. So right now, these positions are in profit for a total of $60. You know, before, I think yesterday I was up like $200 here, and I just closed some positions for a win. So that's basically it, guys. I just wanted to give you guys an update of what I'm doing in the bear market. Bitcoin is down, yes, but the question is, this is where generational wealth is made, and this is where lots of money is made, guys. In the bear market, you need to accumulate as much as you can. That's what I'm doing, building these massive positions so that, you know, once the price bounces back up, guys, the return is going to be exponential. So right now, I'm still fine, dollar cost averaging as I'm collecting theta each and every day in this bear market. But yes, guys, that's what I wanted to give you guys an update on. If you like the content, feel free to like, subscribe, you know, share the video as well, and I will see you guys in the next one.